Hello and welcome to BQ Prime. Joining us today is Mr. Samir Dhir, Chief Executive of Sonata Software. He speaks with us after the company's Q4 results, where net profit declined 3% sequentially and revenue dropped 15%. Mr. Dhir, welcome to BQ Prime. What are your key takeaways from your Q4 earnings?
Yeah, so I think if you unpack the numbers, there are two components of our business. There's an international services business, and then there is the domestic business. We're very excited about the numbers that we have seen in the international services business, where we saw sequentially, in rupee terms, 9% growth quarter on quarter, and about 29% growth Y on Y. So we're very proud of and excited about the progress that we made on the international business overall. And on the domestic business, there is a seasonality factor which kicks in because it's an India-based business, which is very seasonal in nature, and we generally end up seeing a spike of revenues in our Q3, and it moderates out in Q4. But even in that business, if you look at Y on Y, we have done extremely well. We grew the business about 31.6% Y on Y. So overall, we are very excited about where we are as a company. If you take the seasonality factor out of the equation, the last quarter was a very strong performance quarter for us. On the bottom line, though, because we did an acquisition earlier this year, which we announced publicly, there are some one-time costs sitting in the Q4 numbers because we had to pay for the acquisition-related costs, one-time expenses. But if you net it out and do look at the normalized numbers, our normalized PAT, profit after tax, increased quarter on quarter by about 7.8%.
Okay. So, but are you seeing some amount of slowdown in deal making? Do you see that the demand is for subcontracting is falling among the slowdown in deal making that we may be seeing?
So overall, I think the demand momentum continues to be pretty robust for Sonata. I think whether it is geographies in US, Europe, or the Far East in Australia, New Zealand, we are seeing continuing good momentum. In verticals, we see continued good momentum in retail vertical, banking, financial services, and healthcare. We have seen some softness in high tech in few clients where there are decision delays, which is close to about 30% of our business. But the 70% of business, the demand pattern continues to be pretty bullish. As far as deal making is concerned, we had announced last quarter prior to this quarter, about four large deals that we have closed. And even in the current quarter that we just closed the results with, we announced 3 large deals as part of the results. And one of the large deals is the largest ever deal for Sonata, which is $160 million over 10 years. So overall, from a deal momentum perspective, we don't see a slowdown. I think the demand trend continues to be pretty secular, except for pockets of slowdown that you've seen in the high-tech sector in the most recent quarter.
Okay. Your Chief Financial Officer, Mr. Chakravarti, spoke with us about 6 weeks ago when you struck the largest ever deal that you did. During that conversation, and I quote, he said, "These challenges," referring to the US banking crisis, "are going to help us come out stronger." In fact, he saw this crisis as an opportunity. Where do we stand now? What is the status now in that respect, going forward and at this particular juncture of time?
Yeah, so I think Jagan was absolutely right in stating what he said. I think our capabilities, whether it pertains to data privacy, whether it constrains to digital wallet in the banking space, they have continued to be the talk of the need for the customers right now. So we don't see a slowdown as far as our banking financial services customer base is concerned as yet. Of course, things can change later on, but as where we sit right now, the pipeline momentum and the order book momentum, even in banking financial services, is pretty robust. Some of the deals that we are chasing or pursuing right now in banking financial services are significant in nature. So we don't see a slowdown there as yet. Like I said, we only except the pocket of high tech, we are not seeing any significant slowdown in our businesses at this point in time.
Are you witnessing a significant pain point or something in your businesses? Something that needs to be addressed?
Yes. So our strategy, just to take a step back, our strategy is very simple. We want to be known as the differentiated modernization engineering company. What that means is every customer, whether it's a retail customer or a banking customer or a healthcare customer, they're really looking to modernize their estate, which are more consumer-facing estates. So if you're a bank, you want to modernize the estate, which is consumer-facing. If you're a healthcare company, you want to modernize your estate, which is consumer-facing. And that's the area that we are focused on as part of our investment thesis that we have called out about 2 quarters back. That's the area we've been focused on, and we'll continue to focus on to really drive our differentiation and our solutions in the modernization space, broadly speaking. And that space is quite ripe for opportunities right now, because customers continue to move from on-prem to cloud, continue to modernize their data infrastructure, especially with these emerging technologies like generative AI. We continue to see good demand momentum building up in those modernization engineering space overall.
Okay. You mentioned about your largest deal in the last quarter. How is that shaping up in this current environment?
Yeah, we've continued to make good progress on the deal. I think we started nearly about 2 months back, that whole engagement. It's going extremely well. We have talked about the revenue from the deal will be linear in nature over the 10 years term. We started a contract as of last week of March, and we're ramping up on the deal, and I think we'll be fully ramped up on that deal sometime in Q2 of this fiscal year. And beyond that will be a linear revenue curve on that deal by and large. Except for some seasonality aside, because it's a retailer, so they tend to see some spikes in the Christmas period. But if you even those seasonalities aside, I think we'll be fully ramped up by around Q2 of this year to gain leverage from that deal as we go into the full fiscal year now.
Okay. In the last quarter, you also acquired Quant Systems. You did the acquisition to bolster your BFSI business. So BFSI, we know as of now, is not in the best of shape. So what are the synergies coming in from Quant Systems? Was it the right time to make this acquisition?
Oh, absolutely. We couldn't be in a better spot with Quant. We're very excited about where we are. So just to add to what you said, so we did this acquisition for 3 strategic reasons. Number one, we were after BFSI capability. We're after healthcare and life sciences capability. And we were also excited about their capabilities on enterprise data, especially around data privacy. And those all 3 are taken a box. We continue to see good demand build up in the banking financial services client, which is one of their largest clients. We are continue to see a good demand build up in the healthcare side, which is one of their largest client, and now a top 5 client of Sonata. And the whole data privacy momentum and the capability that they had, we are taking that capability into existing Sonata accounts. So which is also helping us differentiate in our existing install base or existing clients of Sonata as well. So yes, overall, very excited about where that integration is leading to. We have completed the whole integration at this point in time from a go-to-market perspective. So Sonata is, from a go-to-market perspective, fully integrated with Quant now.
Take us through your plans for the next 2 quarters. We know for the industry, people are saying, or the brokerages are saying, that's going to be, the next couple of quarters are going to be a washout. Growth is not likely to return in a hurry for the industry. How are you placed in this scenario? How is FY24 looking for you? Or any guidance, you can give for FY25?
Yeah, no, I think overall, look, as we sit right now, we continue very bullish about where the business is. Of course, there are pockets of concerns, especially in high-tech sector, but those are pockets of concerns. But overall, the business momentum continues. We believe that, we delivered 18.7% Y-on-Y growth on our international business last year. We think we'll come in more than that going into the next year. So from an overall perspective, we are still looking at an environment where we will sustain the momentum that we have built, and maybe if all goes well, we'll probably we'll improve upon that as well. So we don't see a slowdown in the going fiscal year. Of course, quarter on quarter there might be some bumps along the way, but overall for the year we're still pretty excited about where company will be heading in going into the next year.
Okay, let's talk about people then. Can you give us some color on what the attrition was like and your hiring plans for FY24?
Yeah, so much in line with our growth aspiration. I think ours is a fairly linear model, so the growth plan will continue to follow the curve of the revenue overall. Our attrition, of course, much like with the industry, has slowed down. We have come in around 12% attrition for the last quarter, which is significantly lower than what it used to be about a year back. And that's largely an industry trend. And some of the corrective actions we have taken have helped us. But I think by and large, we are benefiting from the larger industry momentum or slowdown that others are talking about. We're probably benefiting from that to attract talent and retain our own talent.
How many people do you plan to hire this year, and what was the attrition rate, if you would like to quantify that?
So last quarter, like I said, we came in at about 12%. I think we'll probably be mid-teens attrition going into the next fiscal year. It's hard to predict, but somewhere in that zone, we'll probably be around mid-teens attrition. And our hiring pattern will be in the same zone of about 18-20% higher than what we hired this year.
Okay. All right. Thank you so much, Mr. Dhir. It was quite an insightful chat. Thank you, viewers, for tuning in. This is Tushar for BQ Prime. Stay on for more.